China's economy is roaring back to life. After a period of uncertainty and challenges, the nation is once again on the path to growth and prosperity. The streets are bustling, the markets are vibrant, and the energy is palpable. This resurgence is not just a fleeting moment, but a testament to the resilience and determination of the Chinese people. In 2025, experts predict significant growth. Financial analysts are optimistic, and the stock markets are reflecting this positive sentiment. Economists are busy crunching numbers, forecasting a bright future for the Chinese economy. The data points to a robust recovery, driven by various factors that are coming together in a perfect synergy. This resurgence is fueled by government policies, fiscal support, and strategic stimulus plans. The Chinese government has been proactive, implementing measures to stabilize and stimulate the economy. From fiscal incentives to support for key industries, the policies are designed to create a conducive environment for growth. The focus is on long-term sustainability and ensuring that the benefits of growth are widely shared. The dragon is awakening, ready to reclaim its position on the world stage. As the sun rises over the cities, the symbolism is clear. China is not just recovering, it is preparing to lead. The construction cranes dotting the skyline are a sign of the ongoing development and the ambitious projects that are set to transform the urban landscape. This growth comes with challenges, but the potential rewards are enormous. Business leaders are strategizing, construction workers are building the future, and financial experts are analyzing the trends. The path to growth is not without obstacles, but the opportunities that lie ahead are immense. The key is to navigate these challenges with foresight and innovation. China's economy is undergoing a transformation. The traditional industries are being complemented by new sectors, driven by technology and innovation. Modern factories are equipped with advanced machinery, and tech startups are thriving in co-working spaces. Urban development projects are reshaping the cities, making them more livable and efficient. The government is shifting its focus towards sustainable and inclusive growth. Renewable energy projects like wind turbines and solar panels are becoming more common, reflecting a commitment to environmental sustainability. Community programs are being implemented to ensure that the benefits of growth reach all segments of society, promoting inclusivity and social harmony. This means investing in innovation, green technologies, and improving living standards for all citizens. Scientists are at the forefront of research and development, working on cutting-edge technologies. High-tech manufacturing plants are producing goods that are competitive on the global stage. At the same time, community parks and green spaces are being developed to enhance the quality of life for residents. This transformation is essential for China's long-term prosperity. Infrastructure projects are being planned with a long-term vision, ensuring that they support sustained growth. Educational programs are being prioritized to equip the youth with the skills needed for the future. The focus is on building a foundation that will support continued prosperity for generations to come. The world is watching closely as China's economy regains its momentum. International news outlets are covering the developments, and global stock markets are reacting to the positive news. Foreign investors are keenly interested, looking for opportunities to participate in China's growth story. The global implications of China's resurgence are significant, affecting economies and markets worldwide. The outcome of these efforts will have global implications. As China strengthens its position, the ripple effects will be felt across the globe. Trade routes will be more active, international business partnerships will flourish, and economic summits will see diverse delegates coming together to discuss collaborative opportunities. The interconnectedness of the global economy means that China's success will contribute to global stability and growth. Will China succeed in navigating the challenges and emerge stronger than ever? Only time will tell. The dawn breaking over the city symbolizes a new beginning, filled with hope and potential. The resilience of bamboo, bending but not breaking, mirrors the spirit of the nation. As the city life bustles with activity, the world watches with anticipation. The journey ahead is filled with possibilities, and the outcome will shape the future of not just China, but the entire world. China's government is shifting gears. The focus is now squarely on economic growth. This means tackling deflation head-on. It means boosting confidence in the market. The government is sending a clear message. China is open for business. New policies aim to stimulate investment. Tax breaks are being offered to businesses. Regulations are being streamlined. The goal is to create a more business-friendly environment. These policy shifts are already having an impact. Consumer spending is on the rise, businesses are investing in new projects, the Chinese economy is showing signs of renewed dynamism. China is not shying away from fiscal stimulus. In fact, the country is doubling down on its efforts to boost the economy through aggressive fiscal measures. This approach is seen as essential to maintaining economic stability and growth, especially in the face of global uncertainties and domestic challenges. The government is expected to continue its expansionary fiscal policy. This means not just maintaining current levels of spending, but significantly increasing them to ensure that the economy remains robust. Policymakers are meeting frequently to discuss and implement these strategies, making official announcements that signal their commitment to this path. This means more spending on infrastructure, education, and healthcare. New infrastructure projects are being launched across the country, from high-speed railways to modern highways. Schools are being upgraded with the latest technology, and healthcare facilities are being expanded to provide better services to the population. These investments are aimed at not only creating jobs but also improving the quality of life for millions of citizens. One key area of focus is local government debt. Local governments play a crucial role in implementing these fiscal policies, and their financial health is paramount. The central government is closely monitoring their debt levels and providing support where necessary to ensure they can continue to invest in their communities. Quotas are likely to be increased, giving local governments more financial firepower. This means they will have more resources to invest in local projects, from building new schools and hospitals to upgrading infrastructure. These increased quotas are designed to empower local governments to take bold steps in stimulating their local economies. This could have a significant impact on the housing market, potentially leading to increased construction and investment. The real estate sector is a major driver of economic activity in China, and increased spending in this area could lead to a boom in new housing developments. This would not only provide homes for millions of people but also create jobs and stimulate related industries. This fiscal push is not without its risks. Economists and financial analysts are keeping a close eye on the potential downsides of such aggressive spending. There are concerns about the sustainability of this approach and the long-term impact on the economy. Increased spending could lead to higher levels of government debt. This is a significant concern as rising debt levels could pose a risk to economic stability in the future. The government will need to carefully balance its spending to avoid creating a debt burden that could be difficult to manage. However, the government believes that the short-term benefits of stimulating the economy outweigh these risks. They argue that by investing heavily now, they can ensure continued economic growth and stability, which will ultimately benefit the country in the long run. The focus is on creating a strong foundation for future prosperity, even if it means taking on more debt in the short term. The specter of tariffs looms large over the global economy. China is not immune to this threat. The government is preparing a series of stimulus measures to counteract the impact of potential tariffs. These measures could include tax cuts for businesses, increased infrastructure spending, and support for key industries. The goal is to maintain economic growth even in the face of external headwinds. The effectiveness of these stimulus measures remains to be seen. However, the government's proactive approach is a sign of its commitment to maintaining economic stability. Section 5. Navigating the tariff tightrope: U.S.-China trade tensions. The ongoing trade tensions between the United States and China have been a significant point of global economic focus. These tensions have led to a series of tariffs and counter-tariffs, impacting various industries and economies worldwide. The trade war between the U.S. and China continues to simmer, with both nations imposing tariffs on each other's goods. This has led to increased costs for businesses and consumers alike, creating a ripple effect throughout the global economy. Tariffs remain a major point of contention, affecting everything from electronics to agricultural products. Companies are struggling to navigate these new financial burdens, often passing the costs on to consumers. This trade tension creates uncertainty for businesses on both sides of the Pacific. Companies are hesitant to make long-term investments, fearing further escalation of the trade war. This uncertainty stifles innovation and growth, leading to potential job losses and economic slowdown. The impact of tariffs on the Chinese economy is difficult to predict. While some sectors may suffer, others could find new opportunities. Economists are closely watching the situation, analyzing data to forecast potential outcomes. Some industries could be hit hard, particularly those reliant on international trade. Manufacturing plants may close and workers could find themselves unemployed. Retailers might struggle to keep shelves stocked, leading to shortages and higher prices for consumers, while others may benefit from increased domestic demand. Local businesses could see a surge in customers as consumers turn to homegrown products. This shift could foster a more self-sufficient economy, reducing reliance on foreign goods. The government is closely monitoring the situation, implementing policies to mitigate negative impacts. Officials are working to stabilize the economy, ensuring that growth continues despite the challenges posed by the trade war. Resolving the trade dispute is crucial for both countries. Diplomatic efforts are ongoing, with negotiators seeking a mutually beneficial agreement. A resolution would not only ease economic tensions, but also strengthen international relations. A protracted trade war would benefit no one. Prolonged conflict could lead to a global economic downturn, affecting markets and consumers worldwide. The stakes are high, and the need for a resolution is urgent. Finding common ground is essential for long-term economic stability. Both nations must work together to create a sustainable trade framework, ensuring prosperity for future generations. The world is watching, and the outcome of these negotiations will shape the global economy for years to come. Section 6. Untangling the debt web, restructuring for stability. China's local governments are grappling with a mountain of debt. This hidden debt, accumulated through years of infrastructure spending, poses a significant risk to the financial system. The government is taking steps to address this issue. A debt restructuring plan is being implemented. This involves extending loan repayment periods and providing financial assistance to struggling local governments. Restructuring this debt is a complex and challenging task. However, it is crucial for ensuring the long-term health of the Chinese economy. Section 7. Beyond manufacturing, diversifying for a stronger future. China is no longer content to be the world's factory. The country is actively diversifying its economy. The services sector is booming. Investment in high-tech industries is surging. This diversification is essential for sustainable growth. It reduces China's reliance on manufacturing and exports. It creates new opportunities for job creation and innovation. This shift towards a more diversified economy is already underway. China is becoming a global leader in areas like e-commerce, artificial intelligence, and renewable energy. Section 8. Green shoots or storm clouds. China's economic outlook. China's economic future is a mix of promise and uncertainty. The government's policy shifts, fiscal support, and stimulus plans offer hope for continued growth. However, challenges remain. Trade tensions with the United States could escalate. The debt restructuring process is complex and fraught with risks. Global economic headwinds could dampen growth prospects. Despite these challenges, there are reasons for optimism. China's economy is resilient, its people are resourceful. The government is committed to reform and growth. Section 9. Conclusion, a new chapter for the world's second-largest economy. China is writing a new chapter in its economic story. The year 2025 promises to be a pivotal year. The outcome of the government's ambitious plans remains to be seen. One thing is certain, the world is watching. China's economic performance will have a significant impact on the global economy. The dragon is stirring. The world awaits its next move.